This video is brought to you by the award-winning prop firm, Fidelcrest. All right, folks, here we are in Trading Up. We've got Charlie in the house from Westwater Associates. We've just done a podcast. Go and check it out. Link under the video. But now we're going to walk through what he does at his fund. And we're actually going to see the last week of trading. So the whole week of trading at this unconventional, what they call an unconventional hedge fund. The last week of trading, wins and losses, what it looks like. So Charlie, welcome back to the show.
Appreciate it. Thank you very much. Thank you for having me.
Well, let's share your screen and check it out. Fidelcrest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So what sets Fidelcrest apart? Well, it's their verification stage payouts of up to $30K in as little as 15 days. So you can receive your first payout prior to becoming a fully funded trader. Just complete the challenge phase and verification stage without violating any rules to receive your first payout. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more.
Basically, what I'm going to run you through is just four or five positions that I really took last week, and it really tie into, obviously I spoke briefly about it on the podcast about how I basically used the FOMC meeting, which was last Wednesday now. Obviously we're a week ahead, and you have to apologize that my charts are a little bit more complicated, but I've done them down a little bit on a different layout because, again, this is a week later, and obviously on my current layout, I don't want to be messing around with anything. So it's a completely new layout, and obviously I'm just taking you through the positions that I took last week. And it's really just about showing you how I paired or basically gauged my currencies and my bias on different currency pairs using the macroeconomics first and just seeing what fundamentals were coming out, and then leaning into different technical levels using the two strategies that I've built and where I can really apply myself. If none of the pairs that, let's say, for example, EU, for example, why I never took a short on EU, but took a short on GU, is because there was nothing there technically that matched my strategies that I could take. I couldn't justify it to myself because, first and foremost, I have to justify it to myself, but I also have to justify it to my team of strategists that ultimately give me the, yep, that's all good. And then I have to justify it to clients. So for me, it's just about showing, tying in macroeconomics and how you can really, if you have a deeper understanding of macroeconomics, you know what the fundamental release is generally going to be. So we always had, let's start on USD because it's a massive driver of the market in a minute. Everyone's obviously speculating over USD at the minute, but I'm not going to talk about forecasting. I'm going to talk about last week. So pre-meeting, I got into my positions on the 27th of October. I know when I got into these positions, 27th of October, I got into AU and GU. I believe UJ was a couple of days later, or it might have been the same, 27th of October as well. And I got into UCAD on FOMC, which was the 2nd of November, which was last Wednesday. So they were my positions last week. I also took a loss on EA, and I'm just going to use EA as an example that all my trades are the same between the two strategies. But we'll start on the USD and generally the macroeconomics behind it, and the reason why I was favoring USD bullishness when in the market, everyone was talking about USD bearishness, because a lot of the central banks at the minute are coming to that stage where they've hiked their interest rates so much, it's starting to stunt growth within the economy. It's starting to hurt businesses. So therefore they're starting to cut their employment rates, which is ultimately just going to hurt the economy more and more and more and more, and plummet the country into more of a recession, right? Which is ultimately very, very bad for the currency. And the issue with the USD at the minute is trading so high that ultimately the Fed are in a very, very sticky position because they either have to slow their tightening cycle, which will ultimately now crash the USD because it's seen as not as a soft landing, or they continue to hike their interest rates and continue to plummet or continue to squeeze the economy into an even deeper recession to what it already is. So eventually the Fed is in such a sticky boat where they risk either A, systematic collapse of the economy, or B, crash the currency. So ahead of the FOMC meeting, there was a lot of talks about obviously the Fed starting to turn into a dovish pivot, which dovish pivot basically means they're bearish on their interest rates. Let's put it that way. It's the best way of explaining it. And it was never a realistic approach or realistic ideology. And that's why I talked about the podcast about switching off the news and just really having your opinion on the market and then going ahead with it. Where US oil is heavily correlated with US CPI at the minute, US inflation. So as long as US oil, we're back in obviously last week, as long as US oil is around about $88 a barrel, the Fed is going to find it very, very hard to change their ideology and opinions on whether there should be continuously tightening their monetary policy or cutting it. And also the other fundamental aspect you have to look into is the labour market. The labour market was still strong last week. There's a couple of cracks that are starting to show this week. However, last week, the labour market was still holding. So therefore, there was no real reason that the Fed would look at the economy and think, well, there's a drastic change that needs to be done. Well, the economy is actually holding a little bit. But again, these are lagging indicators. And again, in the next meeting on the 12th of December, it might be a different equation. But last week, there was no real reason for the Fed to stop cutting interest rates. So therefore, there was no real reason for me to be bearish on the USD. So now all it is a case of is starting to pair a weak currency against a strong currency. So let's start on GU, for example. So the GBP, we all know about, obviously, if you're in touch with macroeconomics, you know that obviously Liz Truss came into obviously Parliament or came into 10 Downing Street. And then she started to basically the first way of getting the current, if you can't start cutting interest rates in a country, there's two alternatives. You start to cut tax and you start to cut VAT. And that's basically how you stimulate it. But the issue with obviously Liz Truss's policies is that it was unfunded. So she lost, the UK lost so much trust in financial markets and why the GBP was almost at parity. And this is why obviously what stimulated this massive sell-off. And again, macros move markets, in my opinions, and I use S&D, IPDA to base most of my strategies and lean into technical areas. So again, I was always bearish on the GBP because the pound and UK have lost a lot of credibility when it comes to inflation fighting and interest rates and general reputation in global markets. So I was very, very bearish on the GBP. So again, this is my overall strategy. This is my counter trend strategy. I love this. We had the 4-hour range, and then I look to fill these imbalances. I look to get in on a counter trend movement where I'll basically have a tighter stop loss, which I also talked about on my obviously the podcast. Is basically I look for a 4-hour dominant candle, and I mentioned about my 4-hour closes. I look for a 4-hour dominant candle, and then basically what I'm looking for is an M15 flip. M15 BOS, and then basically I'm looking to get in on either a 15-minute area supply or demand. In this case, it was a 1-hour area supply, and I basically have my stop above these losses. And this is why I'm only allowed to take these risk positions, because this is a risky position in my opinion. I'm only allowed to take this position if I've got percentages banked, which is my tailored risk management model for the fund. I'm only allowed to take these positions if I've got percentage banked for the month. So we obviously got triggered into the position, and I don't go break even on these on this trading strategy until we hit a 50% retracement on the H4 range, because I found doing my data collection and my general strategy stress testing that it tends to have a tendency that whenever we tap 50% retracement within the range, we'll tap and then we'll come and hit SL. So I only go BE. I give the market a lot of room and a lot of breathing space, because if I went after a H1 break, I would have been taken out of this trade and I would have missed out on, I didn't actually take 16% on this. I took 80% off at this area of 4-hour demand. I took 80% off of the position here, and I was looking for longs. However, it absolutely melted out. Never got into any longs because I never got a M15 break, which is my trend continuation strategy, which we'll move on to, which is UCAD. And then I took another 20% off at another area of demand, which was absolutely perfect to the absolute T. It was really, really well managed. And that brings me on to obviously UCAD. Now, UCAD isn't a pair I love, and it isn't a pair I trade. However, I really, really like this position. And again, I had percentage banked. So I thought, okay, cool. The position will be covered. It doesn't matter. Let's just take a punt at it. And I really, really like this. And it's a great example of my trend continuation. We obviously have a 4-hour uptrend. We have clear areas of imbalance to fill within the market. We have a 4-hour area of supply, because the way you can identify imbalance within the market is if we see potentially areas of demand that hasn't been filled or hasn't been mitigated or hasn't been made efficient, we can basically assume that on a more macro perspective that to price towards the upside is very, very imbalanced, and it's an imbalanced market. So on a 4-hour perspective, I'm looking for a trend continuation. We came into this 4-hour demand. We have a beautiful reaction, and that's another thing that I massively look into is reactions, because it can tell you a lot. It can tell you a lot about potential strong highs and strong lows. Hence why my stop loss was below this low and not this low, because the reaction from this low gave me the confidence enough to tell me, okay, cool, this low here is a strong low. And then what I basically did was I found this inefficiency here, and then FOMC obviously spiked. News didn't like it, or the market didn't like it. The news didn't like it at first, shaking out, just triggering everyone's stop losses, triggered me in, and then basically we hit my first TP1, which is 8% off. Again, this is what I'm saying. All of my strategy and all my strategies are practically the same, the two of them. And then I took the other 20% off as well, which again you can clearly see on the MT4 when obviously Cam puts it on. And yeah, no, that is just basically UCAD. Then it leads me onto AUD and the macroeconomics behind AUD a little bit nicer. So obviously the RBA, the Royal Bank of Australia, they were again have turned very dovish on their interest rates, right? So it's been the Bank of Canada and a couple of another one, I can't remember. You'll have to excuse me for that one, but also the RBA have started to slow their tightening of their monetary policy, which can be bearish, and is why I was very, very bearish on AUD, because I believe the AUD to be very, very soft, which is why I favoured AU shorts. And it also lined up of another one of what I loved as well, is because we came into this area of 4 hours supply. We had a 4-hour dominant candle. We had an M15 flip, which was very, very aggressive. And then again, we looked for a 1 hour supply. We could have took this. However, in my opinion, I just really wanted to get into the trade. I just treated this session high here as potential liquidity. We spiked, came into this inefficiency, made this lower time frame. If you want to take the 1 hour as a lower time frame, or mid, whatever makes you happy. Efficient. Triggered in, and then obviously because it is counter trend, it is 9 times out of 10 very, very slow. Counter trend, very, very slow. Counter trend, very, very slow. Again, all of my trades and all of my pictures are the same. So that is really why, and there's a lot of talks about the RBA not hiking anymore and potentially cutting their interest rates for the rest of the year to 25 basis point rate hikes. Again, which is seen dovish, because they've been hiking their interest rates by 75 basis points, 100 basis points, 50 basis points. So they have been seen as a central bank to turn dovish, and is why we can pair the AUD against the USD. Now, we obviously got triggered in, and I went BA again at 50% of the retracement, almost come very, very close to getting tapped out here. I didn't, because I've got 0 pip spreads, so it's absolutely fine. Very, very close. However, stayed in. We rolled to TP1, 80% of the position off. And then obviously I'm already at BA anyway. And then it never ended up taking TP2. And again, it looks very, very similar. And I'll reiterate my point till it installs in people's head that all of my trades are the same. As you can see, it's pretty similar. We take this range low and we come into this area of demand. It's exactly the same on AU. Never ended up happening, which is fine. I'm more than happy to take 80% of obviously 5.31. I think it was 4.8% I banked on AU. Don't take my word for it. It was around about that figure. And then obviously price reverse, because of obviously the Chinese economy with their COVID policies has been quite strong for AUD, because AUD has correlation with China's economic picture, and just why the AUD is obviously rebound from it. And then I got taken out of the trade. No issues at all. That was AU. UJ. Very, very bearish still on Japanese yen, because they haven't done anything. Again, we'll use the macroeconomics. The yen, they haven't made, the BOJ haven't made any changes to their monetary policy. They've kept their interest rates at literally near zero. So that is why UJ has had this steady, massive climb to the upside, is because you're basically pairing a very, very hawkish central bank against a very, very dovish central bank, which is why UJ is absolutely flown. And there's been a lot of talks about the BOJ stepping in with FX interventions, which I believe wouldn't do anything. And in the great scheme of things, all it would do is consolidate UJ and really slow the climb of UJ. What the BOJ realistically need to do is start to change their monetary policy and scrap their YCC to really to pick up some strength in the yen. So that is why I look for counter trend again on UJ and with clear targets in mind, just general imbalance, run this trend line liquidity. It's just general trend line liquidity, just run these highs here. I classify these as internal range structure, and generally very, very weak highs. Run these highs and obviously come up to here. Never ended up happening. FOMC took me out of BE, but again, this is a great example of my trades are all the same. 4-hour dominant candle. You can see a clear transition within the market. H1 is very, very clean. We can see clearly that it was an M15 break or around about this structure point here. We took this stress and higher, and very, very nice impulsive. On the M15, it was a little bit corrective coming into obviously the coming into entry, and just taking this area of 1 hour demand, tapped in, and again we was away, and we went obviously BE at 50% of the range. Do classify this as our range if it wants to connect. This isn't my setup, so it isn't. So 50% of the range, we ended up getting taken out at BE, which is absolutely fine. It's not an issue at all. And then again, EA is just, I took a loss on EA. I took another loss on USDCAD yesterday as well, just trying to really, but ahead of their CPI tomorrow, which again, I don't really see anything changing because of US oil hasn't really moved. It's keeping at a level. So we'll see. We'll cross that bridge when it comes to it. But again, it's just a great example that all my trades are the same. We had a 4-hour structure break, which is now we look for a 4-hour trend. We look for a 4-hour counter trend back into this 50% of this wick, because it has the market loves a tendency to fill 50% of this wick, because I've done the data collection to support that. And again, 4-hour dominant candle. We had an M15 flip that you can see this structure point here, and then I just used this 1-hour structure to obviously get into the trade, and then my stop loss was just above this high again. We came a little bit higher into this 4-hour supply, which isn't an issue. Stopped me out, and then obviously rolled to the downside, which again, it happens. It's not an issue at all. It's just one of those things. And that's really been my week, last week, and how we can use, if you have a great understanding of what's at play in macroeconomics, and I've spoken about the differences between fundamentals and macroeconomics. If you have an understanding, a great view on macroeconomics, you already know what potentially the fundamental releases could potentially be coming out at. And that's really been my trading week, my outlook on the market.
Awesome. That's a fantastic breakdown.
Thank you.
If people want to know what goes on at a fund, and the level of thinking and the level of understanding, not just of technicals but of fundamentals as well, this is a perfect video to go back and have a look at, and you're probably going to need to watch it maybe 10 times to pick out all the nuggets that you've chucked in there, which there are tons. So yeah, Charlie, thank you very much for coming on and sharing that with us. What's the best way for the guys to get hold of you?
Again, in my Instagram is the best way to get in contact with me. You're more than welcome to send me a message. I'll get back to everyone as soon as physically possible as I can.
All right. Well, what we'll do is there'll be a link below this video to the show notes page. On there, you'll see his Instagram and probably other links, and definitely the podcast as well. So go and check that out to find out more about Charlie's story and everything that we've seen here, and piece them all together. All right, guys. Whilst you're down there, click on subscribe, click like, click on that notifications bell, click all, and we'll see you in the next video. Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description.